Hi traders, welcome to the new weekly forecast for the trading week beginning on October 28th. Now coming week is going to be dramatic. We are getting closer to the US election week, that's in the first week of November. We have geopolitical condition because Israel attacked Iran today, and we have the important economic announcements coming up in the next week. So the next week we have all kinds of fundamental factors impacting the market: political, geopolitical, and even the economic events. Now let's dive to the charts and find out how dollar is going to behave moving forward in the next week and the other related instruments in the forex market. So as usual, I'll start with my dollar chart. So I'll go to dollar index. Now here I am this time moving to 3-monthly time frame. Now why I'm going to 3-monthly time frame? On the lower time frame, I'm not finding dollar giving a clear direction to me. It's still range bound, and on the basis of 3-monthly chart, we can have a better picture, a wider picture of dollar market. Now here I'm referring to the previous high, this area, and the low. Now it's been constantly making higher lows, and higher low. We are also getting higher highs on the 3-monthly chart. But if you notice, the last two highs been printed with a massive bearish divergence on MACD histogram and even on MACD lines. So buyers are getting weaker here, and this is going to be your BS level, which is way too far because it's a 3-monthly chart. Now I'm going to apply Fibonacci retracement. I'll select the previous high again one more time. So I'm referring to the previous high and the previous low. So it will give me the retracement levels of the previous downward trend. Connected, and here we got the retracement levels. So based on Fib retracement plotted on low to high basis, high to low basis, I can see the dollar index reached important area of Fib retracement 80%, and the weakness starts coming in. That's it. That's the only thing we are getting on the 3-monthly frame, and I can add a level of support here, which is 101.61. Now let's move to monthly time frame, and on the monthly time frame I'm going to apply Fib extensions multiple times. So in order to get the magnetic zones here, so I'm starting from the lowest time frame, I'm connecting to the first high and the higher low. I'm going to repeat the process, and I'm going to apply again from the next higher low to the next high and completing the second bullish cycle. Just need to change the colors here, and we got the magnetic level. So here, based on multiple Fib extension levels, I'm getting a very strong resistance zone here. This is one. The next strong resistance zone is here. We can go up to this area, and I've got one more, which is here. So I've marked 3 crucial zones here, taken from the higher time frame. Now I'm moving to daily chart. Now if you notice, dollar index is reacting to these zones marked on the higher time frame. Now this is the lowest zone, which means discounted price level. So dollar was supposed to bounce up, and yes, we got the bullish bounce here. So I'm talking about a drop into the zone and bounce from the zone. Now dollar index can reach the next zone, which is around 105.95 to 107.01, and we may get correction. And in case if it crosses this area, then we can expect dollar index to move back to the higher zone. So this is how dollar index is behaving. We got a bullish bounce from the lowest zone, which is always the discounted price level, the discounted level, and it's moving to the next middle zone, and if it crosses, it can go to the highest zone. That's it coming on the daily time frame. Now moving to the lower time frame, that's 4-hourly chart. Now on the 4-hourly chart basis, I'm going to mark the bullish divergence here. This is the level of BOS, and the dollar buyers are enjoying the moves here like this. So here, if you want to see further levels in between, we need to go back to daily chart, and I'm going to add some new levels here. Now based on my daily chart here, I can add Fib extension in the downward direction, starting from the highest point, connecting here. Since it's bearish, I'm going to mark it red, and we have one more here in starting from the next lower high, connecting to the high, sorry, low, and another lower high. So we get some new levels in between. Now there is a very high probability that if you feel the dollar index is coming to a resistance area, so I'm just marking the levels of support and resistance taken from the previous cycles here. And the last one is here. We can add a couple of new levels here coming here. Yeah, I think almost done. We can add a level here as well. All right. So here, what I've done, I've just marked the horizontal levels of support and resistance, and based on these levels, I feel that dollar on daily chart basis is now slightly overpriced. There is a very high probability that it can go to the further levels here, and then we enter into this resistance zone and get the bounce lower. Now we can add a few more levels here in between. So this is the level I'm talking about. I'll just change the color here. Let it be blue to differentiate. Now let's move to 4-hourly chart. Now on the basis of 4-hourly chart, I don't think that the dollar is getting weaker at the moment, although I have seen a bearish divergence here on the chart coming on MACD lines and even on MACD histogram, but the BOS is far away, and in between we have a very strong support level to push it up one more time. So I assume, or I believe, that dollar index can go back to 105 coming from the higher time frames, and then we may see some correction in dollar. So at the moment, dollar index is sitting somewhere in the middle level. So it is not overpriced, it is not underpriced. I can say it's fairly priced. That's it for dollar index. Now let's move to the second instrument. So here I'm talking about Canadian dollar versus Japanese yen. I'll start from the daily time frame. I just need to adjust my chart here, and on the basis of daily time frame, I'll be marking Fib retracement taken from this low to this high. So let's apply Fibonacci retracement. Now this time I'm applying retracement from low to high. So starting from this low to the high, if you notice, CADJPY crashed exactly to Fib retracement 61.8. Now we got a bounce, a strong bounce, and it's expected that it may go up to 23%. So I'm going to add a horizontal box around Fib retracement 23% as the next probable target. Now let's move to 4-hourly chart. Now on the basis of 4-hourly chart, I am going to apply Fib retracement from high to low. Applied. Now we have some zones here coming from the two different Fib retracement scales. One is taken from low to high, and the other one is taken from previous low to high on the daily time frame. Now I'm just adding the zones here. So this is one potential zone, and this is the support zone. I'm going to apply Fib extension starting from the lowest point, going to the first high and the higher low. Let's mark it green since we are talking about bullish behavior. Okay, so what's the behavior here? So we are above 61.8. It's also above 100%. So the next potential is 161.8 followed by 200%. So these are the two potential targets for CADJPY. Now be cautious. In the upcoming week, we also have monetary policy announcement from the Central Bank of Japan. BOJ is going to announce their interest rate, I believe, on 1st. And I'm going to add here the second potential target zone as well. Do we have any signs against in the ongoing trend, the bullish trend? We have already marked the first extension, ABC. Now I can add one more. I can take it as the second A, I can take it as second B and second C. So let's add one more level here. I'll apply one more fib extension on second ABC. Let's change the color to purple and I'll increase the thickness here to get the clear picture. So here on the second fib extension, the market is hovering around fib extension 100%. It stays above fib extension 0.618. And what are the potential upcoming levels? Again, 161 making a magnet here, very, very strong area. And the second one is 200, again making a magnet here. So we get one more confidence that we have two magnet zones moving forward in the upward direction. Now I'm going to add trend lines here. Now based on the latest picture, this is the trend line. Why this is the trend line? Because I have connected, let me make it a bit darker and bolder. Okay, so I'm talking about this dark blue trend line here. So why I have taken this trend line? Because I've connected the last two turning points here. And if you notice, I can mark this is the latest trigger of the bullish trend. So first up, second down, we got the longest third wave, and now we are in corrective fourth wave, which is expected to end somewhere here. The buyers should maintain the price above the rising trend line, and this is anticipated, highly anticipated, the continuation in the upward direction. So I'm going to apply long position tool here, keeping my stop loss lower than this level, and the next target is here. This is the first one. So my risk reward is amazing. It's 2.9. So by risking 1% in the trade, I have the potential to make 2.9% returns in the potential buy setup of CADJPY. So that's all about Canadian dollar versus Japanese yen. If you want to move down to the further lower time frame, that's 1 hourly chart. The picture remains same. I am talking about low, higher low, I'm talking about high and higher high. I do not see any signs against. There is no bearish divergence. So we are just in the corrective phase right now. Let the correction get over and join the buyers and enjoy the long trade here. Moving to 15 minutes. Yes, on the basis of 15 minutes time frame, we are under corrective trend, and this is short-term correction. The ultimate trend is bullish here. So here I'm talking about this trend. I'm talking about the short-term corrective trend. Let it get over, let the rising trend line be retested, and then join the buyers. The next instrument I'm going to talk about is euro versus US dollar. Now, since dollar index is still anticipated to move up, so it has some room to complete the next bullish target. So in the meantime, I believe that euro will remain under pressure. Euro dollar and dollar index, they are having inverse correlation, and they're very highly correlated, but in the inverse direction. So if dollar index moves up, euro dollar moves downward. So let's go to the monthly chart for euro dollar. I've already added some fib lines here. I need to just clean up the chart. So give me a minute here. Okay. So here on the basis of monthly time frame, I can do one thing. I can start from this low, my analysis, and I can go to this high. So I'll be plotting fib retracement from low to high here. Added, done. And here we got the corrective trend reaching precisely to 80% mark, and we got the bounce, and the buyers got stuck at 61.8. So everything remains stuck inside the two most important Fibonacci levels taken on the monthly time frame, FR80 to FR61.8. So I can do one thing here. I can add fib extension in the bullish direction. So starting from the lowest, first high and higher low. So here we got the duplication zone, and yes, we reached very close to this zone, and we got the sharp reaction in the downward direction. Now I'm moving to daily chart. So here on the basis of daily chart, I'm going to add the rising trend line here. So I'm going to connect this rising trend line. Now it seems that the buyers should come back because we are very close to the rising trend line, and that's it. I think I'm going to mark fib extension in the downward direction starting from this high. I've taken this high because this is the high which was printed on the chart when market was bullish and we got into this resistance zone. So this is the high. So here we got a high, we got a downward move, and I can connect to this high. Now this high is lower than the previous high, right? So I'm going to add fib extension by connecting high, low and lower high in the downward direction here. Connecting A to B and B to C here. Now since it's in the downward direction, I need to make it red. So the fib extension 61.8 is here, and we are not yet there. We are slightly far from fib extension 61.8. If correction gets deeper, it can go to the next extension level as well, but we'll talk about the second extension level in the downward direction only once we get below the first extension level. Now here we got, give me a second, here we got high and lower high. So I'm going to apply one more fib extension in the downward direction. So this will help me to get the magnet zones. So second time I'm applying the fib extension in the downward direction. So here I got the magnet zone. This is the magnet zone I'm talking about. So I'm anticipating that if dollar index moves up, it's going to put pressure on euro dollar, and euro dollar should reach to the first magnet zone. So that is the price level around 106.862 to 107.123. Moving to 4-hourly chart, and yes, I'm going to apply another fib extension in the downward direction, but this time I'll be connecting with the high, the first low and the lower high. So this will add some more levels on the chart. High, first low and the lower high. We can mark them with a thicker line and differentiate the color to blue. Now if you notice, I got a clear answer here because the sellers, they were looking exhausted to me because of the bullish divergence here. So this is the bullish divergence I'm talking about. Now if I get to see bullish divergence on any chart, I cannot be taking it for granted that buyers are back in the business. So buyers have to complete the formality of breaking above the BOS. But the buyers, they failed to break above the BOS level. In fact, the buyers got rejected at this major fib level, and I can see the market is quickly rolling downwards. So this gives me an idea that the sellers have not given up and they are going to push euro dollar one more time, and they are going to complete the retest of this magnet zone. So I think we are very close to the bottom, and once euro dollar reaches around 1.0686 or 1.0712, we can look for some short term correction. So this is the plan for euro dollar. I'm not looking to buy from the current market price. I'm anticipating one more push down. Let it complete one more push down with a new bullish divergence being printed on the charts. Let it complete the BOS, and then we will think about short-term buying. In the meantime, dollar index will reach to its high and it will start correcting downwards. The second instrument I'm going to talk about is pound versus Australian dollar. It looks amazingly bullish to me. So here I'm going to the weekly chart now. So I'll just explain in simple words what I have done. The orange lines are nothing but these are horizontal levels of support and resistance. I've taken the pattern from this low, sorry, wrong tool. So I've taken the pattern from this low with bullish divergence coming on the charts and the buyers completing the BOS. I've applied fib extensions starting from the lowest point, so it becomes point A, point B and point C, and we got some magnetic zone. So we have the first bullish extension followed by second bullish extension, and currently pound Aussie is maintaining its pattern above this rising trend line. So here we got a magnetic zone. So this is now a super strong zone of support. By adding multiple fib extension levels in the bullish direction, and until we remain higher than this rising trend line, everything remains bullish, and the first target in sight is this level, which is a big psychological level of 2.00. So pound against Australian dollar should be doubled in the coming days, and it's moving up very strongly. No signs against. So weekly chart remains bullish. Now moving to daily. Now on the basis of daily chart, I was expecting a bullish bounce. So we are holding the bullish pattern above this rising trend line. I've applied fib extension on this one, the latest one. We are holding above the massive support zone, and we got few more fib extensions inside here. It broke the falling trend line taken by connecting the lower highs in sequence. So the buyers are looking strong. MACD histogram very strong, no signs against, no bearish divergence, and I've got some levels in between to be defined. So here we've got some duplication zones inside coming on the lower time frame. The first one is around 1.9658. We are very close to it. Once we reach around 1.9658, I can expect some short-term drop, and this zone should act as support. So 1.9513 to 1.9531 is the area of support I'm looking at, but ultimately I'll be exiting around 2.00. So any drop in the coming days should be taken as an opportunity to buy, go long. Moving back to 4-hourly time frame and adjusting the view here, I see no signs in the bearish direction. So nothing against bullish momentum at the moment. The buyers are maintaining their hold in the market. MACD histogram is still rising. No bearish divergence in place. The idea is if we get a drop and market drops towards 9513 to 9536, take it as an opportunity, and the next target is 9658 to 9681. Followed by 1.9750, 1.9735, and ultimate target is 2.0. Moving to 1H, I can see some short-term pullback being built up here. So because of the bearish divergence coming on MACD histogram. Now please take into consideration that the divergence is visible only on histogram but not on MACD lines. What does it mean? It means there will be a short-term pullback which should be taken as an opportunity to buy. That's it. So pound Aussie remains bullish to me. I've given you the important levels of support and resistance. And finally, we'll move to our favorite instrument, that's gold. Similar story, fundamental reasons, fundamental factors, they remain in favor of bullish gold market because geopolitical conditions are favoring the gold bulls. The technical chart pattern is also favoring the gold bulls. Now here I've applied multiple fib extensions which we have done n number of times in all my previous weekly videos, and this time I've also added the rising trend line. So when I'm looking at the latest trend line based on daily chart, the sellers have not even broken the latest rising trend line which we got by connecting the turning points, the bullish turning points on the daily chart. The super strong levels are here. So the first one to talk about is 1.2679. So until we get a daily closing below 2679, I think the buyers are 100% safe. Now on the basis of multiple fib extension levels, the new upcoming target levels are, let me check. The first one to talk about is 2785. I also see 2760 prior to that. And after 2785, the next level to talk about is 2828 and followed by 2853. Downside, the levels to watch for are 2679. The histogram looks ultra bullish. No signs against as of now. No bearish divergence completed on MACD lines. So daily remains bullish to me. I'm moving to 4-hourly time frame now. Now even on the 4-hourly time frame, the sellers, they could not break the rising trend line, the last rising trend line. So let me just change the color here. So I'm talking about the black rising trend line. Okay, I want the sellers to break the rising trend line at least on the 4-hourly time frame, but they haven't done so far. And the super important levels to look on 4-hourly time frame are, in terms of support, I can talk 2734 or 2735. Now it becomes an important support price. And the next target on the 4-hourly time frame is 2760, followed by 2786 and followed by 2795. Moving down to 1-hourly time frame. Yes, even on 1-hourly time frame, I can see the rising trend line is intact. We got some false breakouts here in between, but those were not carried forward. So the sellers, they could not take the price downwards. In case if we see this trend line being breached, the important level is 2700. Currently, we are above important support of 2734. If 2734 gets broken, then we'll look at 2700 as the next important support, followed by 2676 or 2679, and ultimately we can talk about 2661 to 2667. So I have defined the support and resistance levels on multiple time frames. My view is ultra bullish for gold. I will suggest you to buy the dips and do not look for selling, because the geopolitical conditions, the political conditions, all the fundamental factors, they are favoring gold at the moment in conjunction with the technical chart patterns. So this is my plan to trade in the upcoming week. I hope my trading plan adds some value to yours. And if you like this video, give a thumbs up and take care. Have a profitable trading week ahead. Bye-bye.